Hello friends, welcome to the webinar. We're going to get started in just 2 minutes while people are logging in. And just hang on, at 2 minutes past the hour, we will begin the webinar. We've got a lot of people signed up today, and we want to make sure they have a chance to log in before we get started. Hello everyone, welcome to the webinar. My name is Steven Reiter. I'm responsible for the options platform here at AvaTrade. We're going to have a webinar. I'm going to quickly take you through the platform to understand how it works, but we're not going to focus on options theory or anything. We're going to really focus on options strategies, how to use options, and how to understand our risk management systems. I can see questions, so if you have questions, just type them in and I'll do my best to get to everyone. And we're going to get started in just a moment. Let's just see, we've got maybe one of the biggest signups ever for this webinar. We do these roughly once a month, and we've got a huge number of people visiting, so that's terrific. You also can reach us in the system via chat, etc. So please do send us your questions. You can send us questions during or after the webinar. Okay, just 1 second. I'll pull up the questions and keep an eye on them. Here we go. Questions. Okay. Let's jump right into the webinar now. First, I'm going to show you how to access your platform. When you log into the AvaTrade website, you'll see the list of all of your accounts. You might have only an AvaOptions account. You might have some MT4 or MT5 accounts, but you should see your accounts listed in this menu. If you don't have an AvaOptions account and you register and you only see MT4 or MT5 and you want to add other accounts, just click on this Add Account button. And from this Add Account button, you can add a real account or a demo account. And of course, you can also register through our mobile app, either through the AvaTrade mobile website or by installing the AvaOptions mobile app for iOS or Android. And you can register for demo or real accounts right there in the app. The app and the Webtrader are more or less identical in terms of features and in terms of their look and feel and kind of the way they operate. But of course, it's much easier to work with the Webtrader where you have a lot of real estate. Someone is asking, what is the best tool for Forex trading? Well, the answer clearly is our platform. Let's hop right into the platform. I've logged into my account here under the name Ori King, and I'm going to choose the word web trading next to my demo account. So I'm going to click web trading here next to my AvaOptions demo account. And when I do that, the platform will launch and automatically log in. Because I've already logged into the website, you don't need to log in twice. I understand there is a delay between my speaking and you hearing me. Hopefully it's not going to get confusing with video. Hopefully the video and the audio are in sync. So the platform is now loaded, and you can see on the left side, looking like most other trading platforms, we have a list of assets. You can scroll through them, or you can choose a category, such as FX majors, or you can type in the instrument you're looking for. So if I type in GBP, I'm under majors, it's only going to search there. Let's go back to all. I type in GBP, I see all of my sterling pairs. If I type EUR, I get all my euro pairs, etc. Let's go back to all with no sorting, no filtering. If I click on this hamburger menu, you'll see you can access your account. You can upload documents in order to validate your account. Just click Upload Documents. You can do this from the website or from the Webtrader. And you'll see that you can choose ID and choose your utility bill and upload. The requirements here depend on your jurisdiction, where you're located. This will show you the things that are required for your respective regulation. We can click My Account, and you'll see a list of all the accounts, just like we did on the first page when we logged into the AvaTrade website. And from here, you should be able to deposit to any of your accounts or to switch accounts by clicking on web trading here as well. But let's close that and go right back to our platform. Actually, I'm going to switch I'm going to log into another account instead, where I have some positions already loaded. You can log in directly. I don't want that one. You can log in directly to your account by going to avaoptions.avatrade.com and putting in your account number and password, but the best way really is to go straight from the Ava website. So I'm back into an account that has some open positions. That's why I wanted to use them. On the left side, as I said, we have all the assets that you can trade. In the center or the main screen, you have a chart. It's defaulted to Aussie dollar, which is the first thing on our list. And down on the bottom, you have our open positions. Let's say you're interested in trading Eurodollar. We just click the Eurodollar bid or ask. We get by default a chart of Eurodollar spot, just the FX rate. It's a 1 minute chart. I can choose different candle sizes. So I can go for a 15-minute chart. I can add studies like moving averages for whatever period you like and whatever color you want to put on your chart, like that. We can add Bollinger Bands and stochastics and all sorts of neat things. And we can also remove them over on the right side with a list of active accounts. Either remove them or modify them as you wish. So this is a chart of Eurodollar spot. On the right side, you see this profit and loss diagram in green and red. If I buy Eurodollar and the market goes up, I'm going to profit. And if it goes down, I'm going to lose. If I go short the market, if the market goes up, I'm going to lose. And if it goes down, I will profit. If I click the word limit, I can put in limit orders. For example, a take profit here and a stop loss here. And you see this is purely chart-based trading. You can see on the screen exactly where you're entering the market, which is based on the live bid or ask, where you'll exit the market based on your take profit or stop loss, and how much money you'll make in these profit bubbles right here, saying that I'll profit $870 if I get out at that top level, or I'll lose $900. I can double click on the take profit or stop loss and put in exact levels like this, 106, good till cancel, GTC, and I can put in a specific take profit, 108, and I can also put in an entry level. For example, we're trading right now at 107.22. I can say I want to get in at 107, so I'm going to put in an entry limit order to buy at 107, and I'll sell at 108 if we get there, or I have a stop loss at 106 down on the bottom. If I were going short the market, it would look like that. Very simple, very clear, easy to use. The profit and loss diagram right now I'm showing in dollars, but I could show it in price terms. So for example, 100 pips. I can show it in euro terms, since this is Eurodollar. If your account currency was sterling, you could see your P&L in sterling as well, in pounds. So fully flexible, easy to use platform. I can shrink the chart by dragging up and down on the left axis, and I can zoom in and expand the chart from these plus and minus, or I can hit reset to go back to my original chart. So enough of spot trading. Let's say I'm really interested in options trading. Here is my strategy button where it says spot. If I click that, I get my menu of options strategies. The simplest is a call or a put. A call means I'm going to buy a call or sell a call, a vanilla European style call. A European style call means I'm buying the right to buy the asset on a specific date at a specific price in a specific amount. Here's my expiration date. My option can be for a week, for 2 weeks, for a month. As long as my trade size is at least 10 lots or 100,000 for Forex, I can choose any expiration date from 1 day to 1 year. Our Forex options all expire at 10 o'clock in the morning, New York time. That's the standard expiration time for options. So let's say I'm interested in a 1 month option. What the chart is showing me is 1 month of history on the left. In the center, these parabolas, these curves, are showing me a relevant range of market movements for a 1 month option on Eurodollar. It's showing me in the center parabola plus and minus 1 standard deviation of movement for 1 month. The next arc with these 2 white dots at the top and the bottom is showing me plus and minus 2 standard deviations of movement. And we can say that we are 98% confident that the market will finish between plus and minus 2 standard deviations in 1 month. And then here we have our P&L diagram. Because this is an option, we're buying the right. It means we pay up front a certain amount. In this case, for this option, I'm paying $1,215. That's the most that I can lose. So you see in red, the most I can lose is $1,220. It's fixed. And the profit potential is unlimited. The higher the market goes, the higher my profit will be. I can change my strike just by dragging this strike handle. So an out of the money option, the right to buy at 111.50 is much cheaper than the right to buy at 107.50, clearly, or 107.25. And in the money option gets more expensive. You can see that the risk and reward, the red area and the green area, balance out. It's that simple. Options pricing is simply mathematics based on the probability of getting a payout and how big that payout can be. So if I look at an out of the money option, let's say I want the right to buy at 109, that's going to cost me 62 pips, or for this size of 100,000, that's $620 or $630. So I'm paying $630 for an unlimited profit potential. The orange line is showing you your P&L today. So right here at the center, if I buy this option and sell it immediately, I will suffer a bid-ask spread. I'll lose a little bit just for the bid and ask, but my P&L is basically close to zero. And as the market goes higher, my profit participates. As it goes lower, my loss participates. Let's just expand this a little bit so you can see it better. And over time, the orange line is today, it's called the horizon line, and the red and green is the expiration P&L. We have this nifty feature here in the center where it says horizon now. I can drag the horizon line over and see through time how my P&L propagates. So I can see how the option value decays and how my P&L changes over time, assuming constant implied volatility and a constant bid-ask spread. Change the expiration date, and the ranges will expand. So here's a 192-day option. Now it's going to show me roughly 192 days of history, 192 days of standard deviations of movement, and my P&L. So all of the range is showing you a fair range for the period that you've chosen. Here's a 2-week option. Change your size with either the calendar button, the calculator button you can put in, and just using your mouse to add 100, 100, 200, 300. See, I'm adding more and more. Or you can simply drag your size over back to 100,000. The minimum trade size is 1 lot, which in FX is 10,000. So I'll go to 100,000. Let's say I want to do this trade, I click buy. It shows me now in the execution panel that I'm buying 100,000 Eurodollar calls with an expiration date 14 days of the 27th of March. I have no take profit or stop loss. It's going to cost me $1,047. I have $13,000 of available margin. This is going to require $500 of margin. And the reason is that I have other positions in Eurodollar. So this trade, even though I'm buying an option, which on its own should not require any margin, I have other positions. I may have spot positions. I may have options positions. We calculate margin using span margining, which is a VAR or risk-based margining. We look at all of your positions together per asset and figure out how much margin is required. And it shows you the bid-ask spread, which is 7 pips, basically $74. I click execute. The trade is done. And it pops into my open positions in the top line right here. The first line, it says we bought Eurodollar calls at 107.25. I have a question coming in. Ooh, it's a long one. I'm going to have to look at this really. I'm going to have to look at this in a bit. Thanks for how you make it easy for everyone to understand. One thing to understand. Okay, I'll have to come back to this Niccolo, a bit later because you got a long question. I can't read it all just now. So there's the basic method of trading. I'm going to close the execution panel. If you wanted to sell an option, it looks like that. If you want to trade a put, it looks like that, right? When you're selling a put, you're taking risk to the downside. If I buy a put, then I want to profit from the downside. Pretty straightforward. Strategies, we have all the standard strategies that involve one expiration date: call spreads, put spreads, a strangle, a straddle, A strangle is buying both a call and a put. So now you have two handlers. I can choose the strike of the call, and I can choose the strike of the put. And you really see that P&L diagram on the right. When you buy both a call and a put, it's expensive because you're buying two options. You don't know which side is going to become profitable. A popular strategy is to sell two options, because when you sell two options, you're earning two premiums or premia, but only one of those options is going to finish in the money. So you are taking risk to volatility, but it's a great strategy if you think the market's going to be range bound. And what's interesting is over the last week, implied volatilities have popped since we had a nice big move over the last few days as market becomes a little bit more risk averse. So if we look at the range of the last 2 weeks, the range actually isn't that big, but the range of profitability here is quite a bit larger. So your range of profitability here, if I look at a, let's say we look at a 105 put and a 108 call, you're going to earn 78 pips for selling those two options. That means my profitability is going to be anywhere between the 108 strike plus the premium of 78 pips, from 108.78 on the high side to down 78 pips below the low strike. So basically 104.25 all the way up to 108.75. It's a very big range of profitability, much greater than the range we've seen in the last 2 weeks. And let's bring in some more history by clicking minus. You know, the range has been pretty well within that band for quite some time. Let's look at an 8-hour chart. If you go back here, back to February, to the beginning of February, of course, we were outside of that range. So that's what options trading is all about. Risk and reward. Where do you think the market's going? Do you have a view? Do you have a view on the range, the direction? Do you have a view that the market's not going to move? So for example, selling a strategy. Let's look at a call spread. A call spread, if I buy a call spread, means I'm buying one call, a low strike call, and I'm going to sell a high strike call. Limited risk, limited profitability, simple trade. I'm buying a call and I'm financing it by selling a call on the high side. So I'm limiting my downside. The most I can lose is the net premium here of $2,000. But the most I can profit is about $1,500. If I want to make it more symmetric, I can change the strikes. Here, max I can lose is about 2,000, max I can profit is about 2,000, and my range looks pretty symmetric around the current level. Change the expiration date. Strategy doesn't really change much. Let's go out to 2 months. Picture pretty much looks the same. So if you're bullish, but you're just not sure, here's a low risk strategy to take advantage of a market that is rising. If we click on the option strategy button, we also have a guide. Click on this tab to guide, and all the icons turn blue, and you say, well, what's a straddle? And it tells you what a straddle is. A straddle is buying a call and a put at the same strike. Your view is that volatility is going to, expecting volatility to move higher, because you're expecting the market to have a move, basically. You need to profit from a straddle. You need the market to either move higher or move lower. If it stays where it is, you're just going to pay away that premium, and it's not going to be great fun. But if you look at the sell strategy, on the other hand, you're taking the opposite view. You want to try it? Just click try it. Pops it right into the strategy, right into the screen, ready to trade a call and a put. Let's say I do that on 50,000. Sell, execute. Now I'm executing. I'm selling both a call and a put on EURUSD. And there they are in our open positions. We sold a put and we bought it, and we sold a call at the same strike. So we've got all these strategies right here. This is an iron condor, has 4 legs. Try it. Limited upside, limited downside. That's called an iron condor or a condor. All these strategies are pretty easy to execute, and the main advantage of our platform is the visualization of risk. You can see the interplay of strike and time. You can see where has the market been on the left side, where might it go, or where is it likely to go based strictly on the volatility of the markets as priced by the options market in the center, and what your P&L is going to be. The orange line, your P&L today, and the red and green at expiration. Again, over time, you can see how your P&L is going to evolve. Okay, now let's talk a little bit about volatility. We mentioned that the market has had an increase in volatility over the last week or so. If I click next to Eurodollar, the I icon, the information icon, over on the right side, you can see a chart of implied volatility. We can see, first of all, where was the market today? The low was 106.50, the high is 107.30, which is roughly where we're trading right now. We're trading near the highs. And we have down on the bottom a chart of implied volatility. There are 3 lines in this chart. The blue line shows us implied volatility today. In the center, you have at the money vol, or at the implied volatility of an at the money option. On the right side, you have the volatility of a 10 delta call. So that's an out of the money call that has a 10% chance, roughly, of finishing in the money. And on the left side, you have the implied volatility of a 10 delta put. So typically, these days, there's more a need for protection on the downside. So implied volatility for a Eurodollar put trades at a higher price than implied volatility for a 10 delta call, or higher vol, I should say, or which is the same thing. Now that's the blue line. A month ago, we were in red. That's where the volatilities were a month ago. And just a week ago, implied vols were much lower, the green line. And you can see one of the reasons for that is that implied volatility realized vol, this orange dot, hasn't actually been that high. But given the sudden moves, given the bankruptcy or the takeover of the Silicon Valley Bank, which happened basically Friday and Saturday, the market's a little bit nervous, so volatilities have jumped. And you can see that more clearly if you look at gold. Let's just look at a chart of gold spot. So here's where gold has been on a 15-minute chart. Let's go for a, let's go for a 15-minute chart. Okay, basically in the last week, since the 10th was Friday. On Friday, gold has gone from 1827 to 1910. So that's like a 6% or 5% move, 4 or 5% move over the weekend. That's a pretty big move for one trading day. So volatilities have jumped. You can see that in the implied volatilities, of course, for gold as well. If you want to get more introspection or more evidence of the volatility change, in the strategy menu, you have the implied volatility chart. Right here on the top right, implied volatility, I click that, and we'll get a chart of implied volatility. Let's look at the implied volatility of gold for the last 3 months. This is showing us, sorry, this is not gold. Let's click on settings. Let's look at gold. All I have to do is type into this search box, XAU is gold. 1 month implied volatility of gold has gone up tremendously, basically in the last day. We've gone from a low of around 12, well above 15 vol. I can also add to that where gold vol. Let's compare that to Eurodollar vol. Let's say here's 1 month Eurodollar vol. All volatilities have jumped. We can add to that realized vol. Let's look at gold realized vol. Gold. We can chart anything against anything. The volatility of a 10 delta put, a 25 delta put. Delta neutral means basically the at the money options. Realized volatility. Let's look at how volatile the market has been for the last month. And volatility hasn't been that high, but we certainly got a pop in the last few days. Let's look at 3 month vol instead. Well, it doesn't really show yet because the volatility just happened today. So we're really looking at close to close. It's not really showing yet. But volatilities clearly have popped, and that's why you see this big spike in vol, and this may give you some ideas about what kind of trades you want to do. Let's say you wanted to compare, instead of gold against Eurodollar, you want to compare Aussie. Let's look at dollar yen vol. Dollar yen is another one of those flight to quality currencies. When the markets go nuts, people like to own Swiss francs, and they like to own yen because they're considered to be safe harbors. Let's put in here dollar Swiss vols. Dollar Swiss, 1 month vol. So I've got 1 month implied vol for gold, for dollar yen, Eurodollar, and dollar Swiss. You can see they've all jumped in volatility. It looks like dollar yen's had the biggest move. interesting stuff to trade. And you might say, well, it's gone too far. I think yen vol is too high. I'm going to trade it. So just click on this button, dollar yen, trade dollar yen. And because you're coming from a volatility page, it's going to assume you want to trade a straddle. You want to trade volatility. So it automatically comes to a straddle. Ready to trade. If you want to buy it, do you want to sell it? How much do you want to sell? Sell, execute. Okay. Now I want to move on to the risk management section of our platform. There's the dollar yen trade. We just sold a call and a put. The risk management section. I'm going to expand this. And please know that our platform, this information is also available in the mobile app, exactly the same information on separate pages. This little icon on the right side next to the X lets you pop out this window into a separate window. So if you're working on multiple screens, you can have this open on a separate window and take advantage of multiple trading screens, even from a browser. Fred, can you see that? Can you see that? Can you see the separate screen? Yes, okay, excellent. Just got confirmation you can see it on the webinar. So I can move that around, and if I close it, it pops right back into the platform. So on the bottom, we've got bar charts. The default bar chart is total delta by currency. It's taken all of my positions. I have multiple positions. I have positions in dollar yen, euro dollar, the pound, dollar Swiss, and euro sterling. It's combining them, dividing the net delta across the individual currencies. So if I'm long dollar yen, it means I'm long dollars and short yen. If I'm long euros, euro dollar, I'm long euros and short dollars. I'm short cable or the pound against the dollar, it means I'm short the pound and long the dollar. So it breaks all of the pairs down to their component base and term currencies and creates your exposure, your net exposure by currency. So net, I'm long about $79,000 worth of euros. I'm long, I don't know, $15,000 or $13,000 of dollars. I'm short Swiss, I'm short sterling, and I'm short yen. I also have the same concept for Vega. Vega is my exposure to implied volatility. Vega says, what's my P&L impact from a 1% increase in implied volatility? So if implied volatility for dollar yen goes from 14 to 15, because I'm short options, it says I'm going to lose about $100,000 for such a move. So I've got a lot of exposure apparently to yen vol. Nope, I've got my units wrong. It's just $100. It says the Vega is right here. My Vega in dollar yen is short 56. In dollars, yeah, here it is in dollars. So it says I'm short $56 worth of Vega in yen. I'm short about $100 in euros, and I'm short much more in dollars. I can see it by currency. Basically, I'm short all of the pairs. I'm short options on euro dollar, on dollar yen, on cable. So they're all shorts. So just to try to reverse that situation a little bit, let's buy some euro dollar vol, euro sterling, excuse me. Let's do it a different way. It says that I've got positions in euro sterling down on the bottom. I have one position only down on the bottom, euro sterling, one position, and it's all coming in options. It says I'm short $1,500 worth of delta, or 1,500 euro sterling. I'm short 1,500 euros of euro sterling. Click the word euro sterling, and my position will show up in the open positions in the trading screen. So there's my only position. I'm short a call. I'm profiting from that call, as you can see, because I sold a call. I'm making money because it's out of the money. It stayed out of the money, and the market has been moving my way. If I choose euro dollar, all of my euro dollar positions will populate into this screen. Takes a moment, and you can see where I have executed cash and where I have sold, what strikes I've sold calls. I bought a call here or sold a put here. We can see it in our open positions. Filter for euro dollar. These are all of my euro dollar positions. Got a whole bunch of them. It looks like I'm profiting net $400 from all of my open positions, and they're all showing on the screen right here. So you can see in one screen all of my positions and my net P&L over time from these options. If I just take a few of these options, if I remove some of them, now I have only these, let's say these two. That's my straddle. That's not too interesting. Here is just a short put, and here's a long cash position. So here I'm long cash and I'm short a put. And let's look also at being long. Let's see, add something else in there. I'm short a put here as well. I've got 3 positions in my screen: long cash, short 2 puts with different expiration dates, and you can see what my net exposure is. Okay. Let's clear them all. Let's go back to the risk manager. Let's do the same thing for dollar yen. Click on dollar yen. All of my dollar yen positions show up on the screen. I've got 8 positions in dollar yen, and that's what they look like. I can close them all by clicking execute. All 8 of these positions will be closed. It says success, so now they're all going to disappear from my open positions. And you can see now I have no more dollar yen. I go to history, I can see all the trades that I've done today. There's all those dollar yen positions we just closed. Closed trades, you can see all the trades we've done, all the trades that we've closed today, and how much money we've made or lost on each one. And by the way, we now have this new feature to generate reports. Over on the side menu, report, account statement, we can see all of our trades, my entire statement for today, for the last 24 hours, for the last month or the year or the inception to date. So if I just click daily and daily for today, I could choose daily for any date. I can go back a year and look what my positions and what my account value and my trades were on any day. Let's just look at today's report, click apply, and a window will open generating the report, which you can then print or print to a PDF, and you can see all of the information about your account, including generating statements for tax purposes. It's all the same. That's brand new, so please do take advantage of it. So that's the platform. We have another, let's say, 5 or 10 minutes. I need to say, and I should have said at the beginning, that nothing we're saying here should be taken as advice in terms of what to trade or how to trade. We're just an execution-only broker, which means that we're giving you all the tools, we're giving you the prices, we're giving you amazing tools to analyze the markets, analyze your strategies, monitor your risk, and make the decisions for yourselves about what you'd like to trade. Now, one thing I have not shown you is our Autochartist platform. I need to log into a different account to be able to show you that. I'm just going to log out of this. I need to log into back into a real account to show you that. Let's go back over here. No, let's go back. We'll probably have to log in again. Let's see. Here is a real account. Yeah, my session ended. Bear with me 1 second. Logging back in from the beginning, and I'm going to go to one of my real accounts. Real AvaOptions account, web trading automatically opens for me. This account is not funded, but it's a real account, so I can show you the Autochartist feature. Autochartist here in this orange ball next to the currency pair tells you that there are strategies, there are automatic chart pattern recognition or signals. So for example, dollar Swiss, if I click this, there was a breakout signal on the 24-hour chart. It's a channel up. It's a bearish signal in dollar Swiss. It was recognized on the 11th of March. If I click it, it shows me a picture. I can apply pattern, which means put it right into the chart. This is an a daily chart. You've got this channel. The blue line is showing you when the trade was identified, and it was a bearish signal that was identified, of course, over the weekend. Let's go to cable, do something similar. Also for today, let's go on the 30-minute chart. We've got also a bullish signal. Apply the pattern. It was recognized on this blue vertical line, so it was recognized at 1 o'clock in the afternoon UTC, 1 o'clock in the afternoon GMT, or common time. A bullish signal was recognized, and it's been proven correct thus far. And the strategy might recommend a stop loss, which in this case it has. So choose your favorite asset or the asset you're interested in. You can cycle through the various signals, or you can look at the menu of the signals here, back to list, and see which ones are of interest to you. Let's look at gold. Gold, you've got also a breakout signal in a 24-hour chart. Gold's a very technical asset, so it's very much worth paying attention to these signals because everybody else is. That's one of the main reasons. Everybody's looking at the same charts, so it can be, at least in the short term, can be a self-fulfilling prophecy. But this was a bullish signal recognized also over the weekend or at the close on Friday. And bullish, there's no take profit or stop loss recommended. You can see that chart right there, etc. We also have the same, by the way, for equity indices. You can trade the Dow, you can trade the US 500. These are actually futures-based signals. We don't have options on these yet, but very soon we will have options on the S&P 500 or the US 500, as well as the US Tech 100, which is based on the NASDAQ. We're going to be launching those soon. We're hard at work on getting them ready. So you've got all these neat tools. We also have on the side under trading tools, you can see the economic calendar. It's important to know what information, what data releases are coming up. So when you trade options, you know what might be moving the market during the course of that option. We also have this thing called Option Quant FX, which is analytics for options trading. It looks at volatilities. It looks at the trend in the market. It looks at the trend or the richness or cheapness of volatility based on historical levels. It looks at skew, which means it's looking at where are calls trading relative to puts, relative to where they have been typically for this asset. And it looks at the correlation of volatility and skew, and it comes up with trade recommendations. So for example, in dollar yen, there's a stronger signal. It says buy with an exclamation point. So it's a stronger signal to sell a put spread. It's a bullish signal, and it says volatility is rich, and therefore you should sell a put spread as a way of selling volatility. There are other ways to sell volatility, but this is the strategy recommended. You can go through the specific pages to understand it better and understand how the strategies are chosen according to this last page. So we got all kinds of tools in here for everyone to use. Now let me turn again to the questions. I'm asked about Spanish. The webinar is being recorded. It will be uploaded to YouTube in the next 2 days. You can use automated translations in YouTube, but there are other tutorials that we have online that have transcriptions that are better for translation. But it is being recorded, so Philippe and Georgia, yes, several people have asked, it's being recorded. It will be in YouTube, and you will go to YouTube, you can find many of these webinars. And by the way, right here in the side menu, video tutorials, you can access them right here. This is a very polished tutorial for the mobile app, but of course, as I mentioned, it's the same as the Webtrader. And over here, you can see a list of various webinars. So it's all accessible right here in the Webtrader as well as in the mobile app. Indices, can we trade indices and options? As I mentioned, we will very soon have options on the US 500 index and the Tech 100 index. How do we sign up for the AvaOptions platform? Well, that must be the most important question. Go right back to, go to the AvaTrade website. On the AvaTrade website, go to the options, AvaOptions page here, AvaOptions, and you can get some information about the platforms and about the product. There's a little video. We have this live widget that lets you see live mid-market pricing in anything without even using the platform. But just click register now, and you will be able to sign up. Choose your country, put in your information, and sign up for a platform. If you already have an account with AvaTrade, as I mentioned, you can simply add an AvaOptions account. So you might have an MT4 account or an MT5 account. You simply need to add an AvaOptions account. And definitely until you're comfortable with options and understand the platform and how it works, please use a demo account. It's a fully featured demo account. It's good for at least 3 weeks. Trade, play with it, understand it. As beautiful as I think this platform is and how easy it is, I think, to understand, that's me, because I've been talking options for 25 years. I know it's not that simple. So please use the demo account. We really think our platform is the best way to learn about options because of the interactivity of this screen, because of the way it shows you risk and reward, because of the way you can see all of your risk. But by all means, use a demo account first. Options on crude. We will have options on crude will be the next thing right after we get live with options on the 2 main US indices. Absolutely, we want to have options on crude. Right now it's Forex, gold, and silver. Next, coming up very soon, and I hope in the next month, is options on the equity indices, the first 2, and crude, and then other global equity indices. That's all we've got time for. Again, thank you very much for joining us. Please go to YouTube. You can find lots of tutorials here. Reach out to your account representative if you have one. Open a demo account if you don't. And good luck trading. Stay safe. Thanks, everybody.